Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, March the 7th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, though, we are here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. Not really a whole lot to see there. Mario Draghi did talk about interest rates in the European Union and the fact that they are not going to be raising interest rates anytime soon. And as a matter of fact, with the low inflation rates and the economy starting to slow down, they're actually even thinking about easing somehow. So it seems a little bit early to really talk about that, but that is what was being brought up by Mario Draghi in the ECB press conference. Let's move back over here to the United States. We've got revised non-farm productivity coming in at 1.9%, expected to be 1.5%, so a little bit higher than expected. Not that great. We also got unit labor costs that came in at 2%, expected to be 1.9%. We would like to see this number go higher as we've seen some of the borrowing and things of that nature coming out of the retail investor. We need to see some of these labor costs going up as they spend and borrow. So that is good for the overall economy. That can help drive inflation a little bit. We also got initial unemployment claims coming in at 223,000, in line with expectations there. Natural gas storage is also in line with expectations at 149 billion cubic feet drawdown. Expected to be 141 billion cubic feet of a drawdown, so just slightly higher than that. And then we got Bernard speaking later on this afternoon, and a couple of other things coming out of Japan, but not really economic data that's going to be driving the markets here. And then we got some good economic data coming out tomorrow in the form of non-farm payrolls and a couple of other things that we'll talk about tomorrow. All right, let's move on to the overall markets. We've got crude oil. We talked about this with yesterday's big build in crude oil that we'd expect some weakness. We saw a little bit of weakness yesterday, but again today, late in the day with that rally in crude oil was more of what I believe to be a flight to safety with the equities, the way that they sold off late in the day. And we're starting to see some of that continuing today. So we could see gold, bonds, and crude oil start to move higher as some of these headline names are starting to get beat up a little bit. Also, remember I threw in some of those utilities thinking we were going to see some second rotation into some more riskier assets like tech and things of that nature. That it doesn't seem to be the case right now. It seems like utilities are becoming a safe haven as well. All right, so crude oil slightly in positive territory. We've got gold in positive territory as well, trying to fight its way tooth and nail back up into the 13 handle. We got back into that 12 handle, right? We are finding support on this 61 Fibonacci retracement there. So that is acting as support as we would expect. We got a big volume node here building, which is gaining price and acceptance through time and volume. We could start seeing this volume node, time and volume node move higher. That would be a bullish sentiment because price is being accepted at higher levels. That is very bullish if we start to see that happening. Now let's talk about the bonds. You can see they're moving higher. Bonds moving higher as expectations of interest rates are going to start waning a little bit, meaning they're going to come off. This is kind of solidified with what Draghi was talking about today with the ECB, and that they are looking at maybe some way to do some quantitative easing or ease a little bit after raising interest rates recently. So bonds are going to be moving higher, as that would be somewhat reflective of what maybe we are going to be seeing with some of our FOMC members. So keep your eyes out for, like I said, Williams and Bernard speaking today. So I forgot about Williams. He's speaking as well. but a move higher today in bonds based on what we'll see here in the equities. Actually, let's talk about the VIX. VIX is spiking higher today based on the equities as well. All of these levers and pulleys coming to fruition in the overall markets. You can see the Dow Jones almost unabated from the open. This index only shows the day session that we've done during open market operations. And you can see we're kind of trying to claw back a little bit. For the most part, that feels more of like a dead cat bounce, or some of the weaker hands, day traders starting to cover some of their positions as we get closer to some of these Fibonacci and or support areas. Okay, so we're seeing that with the NASDAQ today. The 200-day moving average has been acting as support. Today, we peeled right through it. As a matter of fact, it was acting so much as support that it started building a volume node there that could see one of these start moving. Now, as we are seeing this weakness and approaching this Fibonacci extension here, that is going to act as support as it's acted as support before, but we are really starting to gain momentum towards the points of control. As you can see here, broke through the 200-day moving average and the Fibonacci retracement here. That is acting as support today, but it also lines up very closely with the point of control. I'm expecting this to get down below this Fibonacci and start migrating towards that point of control. This is what I was talking about. We got a sell-off, pretty bearishness. Equities rallied a little bit, pretty much on Draghi talking, but the overall economic picture is not very good, and we saw the market really starting to see some weakness there. We are this is the overnight and day session, making it look like we could be finding a bottom in Deer, but I covered yesterday. It was a little bit early. I was talking about this. It had I had an order in there, came down to the 160. That's the handle that I had. Now, we talk about this whenever you're buying puts or buying calls. Once it hits your strike location, that's kind of in and around where we're looking to cover. That came in line with that support area. We've started really seeing weakness throughout the day in Deer, and it just was there's no stopping it. It just kept feeling like it was picking up momentum. I had moved my position. I was trying to work a 780 offer, and the market, I saw those markets selling off precipitously. The options I knew were going to start rallying. I moved it up to 825, and that's where I got out. So I had on those I was long the 160 puts in there that I originally paid $5.20. I was able to get out of those for $8.25. So a little bit better than a 50% increase in my profit. Usually I'm looking at trying to get out of that trade for about probably $7.85. But like I said, I saw this market starting to sell off and moved it up just a little bit. And then towards the end of the day there, because I said I was getting out, I decided to pull the ripcord on it. Didn't look that great this morning right off the open. We saw that market really slam down. But with this bounce back, it looks like I picked about the right time to get out of this trade, as it looks like Deer has created a chart pattern that is finding a bottom here after testing this value area high in Deer. So, but I'm out of it. The only thing I might be looking to do is add something for a bullish move here in Deer that going forward. So I'm going to have to wait to see if we get a little bit of confirmation how the rest of the day kind of works out, but I could be flipping my position to a bullishness in Deer. All right, AMGN is a trade that I've added on to my portfolio today with this move. It seems like it's a little bit overdone. We're kind of getting to that point where we're overextending past the value area, right? That's where we start seeing that it is a little overdone. It doesn't mean that it can't go down and test all of these areas or even this little volume node down here. That's not what I'm saying. Bearishness could continue that to that point. But the beauty in this implied volatility that's expanding in and around a non-binary event, as you can see in this month here, it is a clean month, no binary event to worry about, not even a dividend. So this is all volatility generated off of the market movement, which is good. So we have a clean month to play with. I was able to go into AMGN and sell some puts that are really in line with a support area here. This would where we would be saying that it is really overextended. I'm able to get in with the credit and everything else being said below where this low is. So let's go over this. In the April contract, I was able to sell the 165 puts, which is slightly above where that low is, right? The 165 puts is above that, but with the collection of credit of $1.99, then my break even is right there at 165.01. So my break even is below where the 52-week low is. I don't expect us to see that. That 52-week low was created during the market sell-off. Remember at the in the middle of the summer, April, spring, about this time last year when we saw volatility building up. That was the low we saw for AMGN. That being said, I don't think that we're going to retrace that far to see it. I'm able to get $20 below where the underlying is trading, and the market is really only predicting about a $14 move, positive or negative, in AMGN. So I'm well outside of that. I'm very comfortable. So happy with that trade, looking to get out at 50% of my max profit. So if I can get out for $1 profit, that's where I'm going to be looking to get out of. I've written all that stuff down following my rules for this trade. So check it out at protraderstrategies.com. And we got a webinar today where I go through these steps, where I come up with the market assumption. I figure out what the volatility is and find a strategy that's appropriate for all of the things going on in the market. It's not all about just knowing how to build, let's say, a broken wing butterfly or an iron condor or a straddle, a strangle. There are specific rules that you need to have in order to set up these strategies according to my rules. Now, if you go online, it's just going to tell you like a straddle. Basically, you either buy or sell both at the money strikes, right? Well, that's not as easy to do, to be quite honest. There's a lot of pitfalls that go in and around something like that. You need to know when the volatility is at its optimal point for a particular underlying. You also need to know if the underlying is appropriate for trading options. You need to know if your directional assumption is appropriate for the strategy. And I go through all of that stuff in these webinars, so please check it out at protraderstrategies.com. If you can't take that, take it easy.